Hello everyone, welcome back to Zumit Crypto YouTube channel. Today we will talk about the weekly chart of Bitcoin, the developments that has been happening here. We will touch upon two topics. First would be the volume analysis in last 90 weeks that has been happening, and we will try to understand what we can predict about the price action with the volume here. And second would be the symmetrical triangle that has been forming in Bitcoin. So that is going to be our discussion. So last week we were here. This candle was forming on Monday, exactly last week back. And I think somehow the support of 100 days moving average on weekly chart is giving a support here. And it is still up. So since the time we bottomed out in the bear market of 2022 and we climbed back to the levels of 2021, which is around 64,000. Since then, we will try to understand the volume distribution here. So during this 30 weeks of consolidation, we have seen the average volume wherein the prices were just languishing here and there. The volume was around 204,000 bitcoins of trade every single week. That was an average one. So that became a base case wherein there was no movement. The prices were trying to negotiate whether they want to go up or they want to go down from here. So that becomes the first phase for us. The second phase was when the Bitcoin broke out from this level and reached out to the new high, which was around $110,000. So during this time, as we can see, there was a lot of activity in the volume as well. The volume spiked in those 8 weeks. The volume was 288,000, which was much higher than the consolidation phase that we see over here. Then came a phase where it again went sideways for around 9 weeks. The volume dipped. It was around 174K, which communicated to us that there is no serious selling happening, or probably the market is still deciding. In the next phase, there was a correction, and that was a brutal correction which took us back to the level of this, which was around 75,000, and we saw volume spike, but volume were not so high that we can say that this breakout was neutralized, but there was good volume over there, around 206,000 in those weeks. The actual problem started from there when the market bottomed and then they started to make a new high. During this phase, the Bitcoin market moved from 75 to around again 111,000. But the volume was very tepid. It was very low. It was lower than all the areas that we discussed about, all the zones. It was 167,000, and but we were trying to understand whether the volume would come up or not. Then came a long period of consolidation for the Bitcoin, wherein it tried to break out from the zone. It tested 120, 125,000 around 3 times, once here, and once here. The surprising part was the volume for this 18 weeks of consolidation was very, very low. I mean, if there's an attempt to break out to the new high, it should have been accompanied with a good volume, which was totally absent. So even during that time, when we were reading about such kind of patterns, we knew that this was the period of what you call systematic distribution, wherein every rise is being used by the smart money to exit the Bitcoin, and that's exactly what happened. There was no spike of volume, and for 18 weeks it was just sideways. Then came the breakdown from here. Then came the breakdown, and it was a 35% of breakdown from the high, and again the volume spiked to 180,000. In those 7 weeks, we saw high volume. That means this was not a normal correction. Something was happening in the market, and we wanted to see whether this is a complete reversal or not. And so we waited for the next phase, which is the current phase. In this current phase, unfortunately, it appears to me in this 4 5 weeks of consolidation, the volume has dipped again to 123,000 in last 4 weeks, and this is not an encouraging kind of volume distribution here. It shows that there is no real interest in making this thing a bottom, and there may be more pain in the future, and probably we will see something coming up. So the bias is at least with this kind of price action and the volume says that we may feel a bit more pain here. Now let's talk about the wedge, not the wedge, the symmetrical triangle that has been forming here. So as we discussed last time as well, this is the megaphone that was forming higher high, lower lows, and it broke down from here. Now this line has become a resistance for the price action, and this is what is happening in last 5 weeks, high highs, and so that makes a clear case of triangle formation, symmetrical triangle formation. Now, to understand this triangle formation more closely, I think it's better if we look at a pattern in a daily chart, so that will give you a better picture here. This is the same chart that we talked about, but that is into the daily chart. So this is a triangle that has been forming here, right? So we don't know what will happen. I mean, we have a bias towards the downside, but we will have to wait. I have some positions, but for any new trader who wants to enter the market, one has to wait before this symmetrical triangle is broken either on the upside or on the downside. And of course, volume will also play a part, and I'll talk about it again. So now the classical chart pattern theory suggests that this length of triangle, which in this case is 59 bars, 59 days, any good breakout, because what actually happening, it's a way of forming a coil wherein higher highs and lower highs and higher lows are forming here. So when the coil is formed, and we know somewhere there's a lot of stops are building on the upside and the downside, and at some point this will be broken. The classical chart pattern theory says that the optimum time would be around 66 to 75% of the length of this triangle. So 66 means 2/3 and 75 means 3/4 of this length. So if the length of this triangle is 59 days, the 2/3 would be 39 days, and 3/4 would be 44 days. So this period would be the optimum time where if there is a breakout happens and it is accompanied with good volume, then it's safe to take a directional bet either on the upside or on the downside. Now if you look at the calendar, so this period is from 30th December to 4th of January. Now we know that we are very close to the holiday season. Most of the traders would not be available, and probably will languish here for a good long time before we take a decision of going up or down. And we also know that 3rd and 4th of January would be Saturday and Sunday, and we do not want to take any bets based on these price action on these 2 days, Saturday, Sunday, 3rd and 4th. So my base case becomes that this period, 30th, 31st, 1st and 2nd, these 4 days, if we see any breakout or breakdown with good volume, then probably we can safely say that the trend, it's a what do you call, continuation trend towards downside, or it's a trend reversal towards upside. So going back to the chart again, the weekly chart, if it has to happen on the downside, then the targets that we will take here would be something like that. You know, from here to here, we saw 35% of correction, and if it breaks down, then we will see this kind of action again from the top of this candle, this wick, which may take us towards 60,000. And interestingly, even your 200 moving average on weekly chart is going to converge here with this price target in the coming days. And it may, I mean, at least through the chart, we can say that it may happen probably in the month of February. So this could be the downside. The upside, it's difficult to say about the upside because this is the continuation, this is the breakdown, this is the consolidation, and this is the breakdown. If the continuation has to happen, if there's a change of trend reversal, then probably we will see a different price action. If we break out from here, and probably we'll see something like revisiting the 100 and 2,000 kind of levels again. And before we'll decide whether this upside up movement has to be continued, or it is just one of the things that is happening in the market, so too much of volatility. So that is my base case here. I need to understand what is going on in the market by looking at these candles very closely. We may not have the decision made very soon because of the kind of inactivity that may comes in the coming, I mean, the upcoming days. But next week on the weekly candle, on the weekly chart, some candle which may take it up or down may appear, and when that happens, either upside or downside. And the second most important thing, I think I missed to mention that during this 90 weeks of analysis, the average volume was around 180,000, and we like to see any breakout and breakdown on the closing basis on the weekly chart wherein the volume exceeds this 180,000 kind of bar here. And we may well see once this is resolved either on the upside or on the downside. But again, as I mentioned, my bias is on the downside. If any trader has already taken short positions for whatever reason, I think the best time to exit would be around 95,000 if it breaks out. And yeah, so that's about the weekly chart that I want to discuss with you. Thanks for joining me. If you like this channel, please subscribe to it and like the videos that we have. I will come up with the daily chart and one more learning video very soon this week. So till that time, thanks for your time. Thank you. Bye-bye.